Good morning, esteemed investors, and thank you for joining us at the breakfast table this morning. My name is Linda Agbodion, and with me I have Samuel Oladipo. And this morning we'll be looking at the market. We'll be reviewing the market, updates on the first quarter released results 2025, stock recommendation, dividend qualification window, corporate actions, and the weekly expectation. So looking at the equities market review, we had a positive, out of 5 days, the market closed positive for 4 days. And looking at the distribution of volume traded across the sector for the week ended 9th May, we have the financial service sector leading the chart by 62%, followed by others 17%, and the service sector 14%, while consumer represented 7% respectively. Now, the NGX, ASI, and PETSI index movement for the week under review appreciated by 2.54%, closing at 108,733.0 basis points, while market capitalization settled at 68.34 trillion, driven by strong investor sentiment and Q1 earnings released. The NGX 30 mirrored this trajectory, reflecting a broad-based rally across large cap stocks. Looking at the market activity, where we'll be looking at the volume and the value analysis, top equity turnover stood at 2.65 billion shares, valued at 77.01 billion, marking an increase from the previous week, where we had 2.2 billion shares worth 75.41 billion. The financial service, as mentioned, led the trading activity, accounting for 1.64 billion shares in value and 45.83 billion shares in volume. The service and the consumer goods sector followed with a 364.65 million and 190.22 million shares respectively. Top traded equities, we have the GTCO, the Access, Tantalizers collectively contributing 31.74% of volume and 36.02% of total market value. Still looking at the sectorial performance, all the sector indices closed positive, as we saw NGX banking closing with a contribution of 3.09%, consumer goods 5.41%, NGX insurance 0.99%, industrial 1.09%, and the oil and gas 3.98%. These gains reflect investors' position. It reflects investors' position and positive reaction to strong earnings prints and stable macroeconomics indicators. Okay, looking at the earnings updates, I'll just brush through quickly. We have Access Bank and Zenith Bank Q1 2024 earnings. I'll just touch on the highlights. Access Bank and Zenith Bank PLC delivered a resilient Q1 results, with earnings supported by improved net interest margin and non-interest income growth. Looking at GT and ETI, both banks posted solid double-digit growth in profits after tax, indicating strong balance sheet fundamentals. Next, we have the consumer and industrial sector, where the Nestle and Dangote Sugar form part of it. They both reported robust top-line growth, driven by volume expansion and cost optimization. And the list go on and on. We have the conglomerates and the energy, where we have Transcorp and UAC under that, recording steady revenue improvements, driven by stronger power and food segments. So moving on to the energy sector, where you have Seplat Energy, and it benefited from higher crude prices and stable production levels. Going by the stock recommendation for the week, from 1 to 18, we have it under the buy recommendation. This is just an extraction from the original recommendation that has been sent out already. do well to look at the list, and it's best to take action now. We recommend positioning in fundamentally strong and dividend yielding stock ahead of qualification dates. Looking at the dividend qualification window as at today, we have the likes of ICO. They've declared their dividends, and the qualification date is 22nd May 2025. Dangote Cement, qualification date 10th June. AXA Mansard, 26th June. And Presco, 4th July. So as at 12 today, the dividend qualification calendar to optimize portfolio yields strategy. We advise investors to be encouraged to align position to capture value in the forthcoming payout. So what it means is if you're buying before this QD, you have access to the declared dividends as printed on the screen. Now, looking at our corporate tracker, we continue to monitor the board announcements, AGM dates, dividend declaration, as well as share reconstruction exercises across the market to keep our clients abreast of the relevant corporate events. Looking at what we have on the schedule that you can see on the screen, the likes of NACO, their dividend qualification date has passed and payment is on the 23rd. The likes of Unilever, the payment date is today. Access Bank, their payment date is on Thursday. Stanbic, 16th, among others. These slides will be shared across so we can have this in our record and monitor the corporate tracker as well. Now, looking at the market expectation and outlook for the new week beginning today, we anticipate a sustained bullish sentiment as investors react positively to the Q1 earnings and stable macroeconomic indicators. While profit taking may occur in high flyer stocks, net buying pressure is expected to dominate. Overall, we forecast a favorable close of the trading week, underpinned by the increasing institutional participation and dividend positioning strategies. All things considered, we expect purchasing activity to exceed selling forces, resulting to a favorable end of this new week. So without further delay, I'll be handing you over to Mr. Samuel Aladipo for the fund market info.
Good morning, everyone, and thank you for taking out the time to join us. Very quickly, we'll look at the activities that transpired in the fixed income space of the market and what we should be expecting for this week. So it is important to start on this note that this week is going to be a very interesting week for the fixed income market, as there are lots of activities in the pipeline. And I think the one on the front burner would be the Sukuk bond. I think the DMO announced just this morning that the FGN Sukuk bond is now open for subscription, and we'll communicate to all of our clients who might be interested in these various securities. But last week, we saw just a relatively quiet week, and despite the strong liquidity we have in the system, we would have expected things to have be a bit quite strong, and activities to be quite strong, but we relatively saw activities on a quiet note, as the funding rates remain relatively stable, with the open repo rates closing flat at 26.5. And we also saw the overnight rate increasing by a marginal 12 basis points to close at 26.95. I know we've once asked, one of our clients had once asked this question, that what is the importance of this rates we keep quoting? So this rate is actually the bedrock of all the activities in the fixed income markets. Whatever these rates points to or speaks to, gives us a direction of of how the market traded, or possibly what we should expect for this week. And with liquidity still being very strong at 1.30, we should expect some bullish run in the market. And that was exactly what played out last week. We saw that the Nigerian Treasury bill secondary markets traded on a positive note. We saw increased demand, and that wasn't surprising because if you look at the last auction, we saw massive oversubscription. So we saw activities in the secondary market from some of the investors that lost their bid at the primary market, which further pushed down yields by an average of 22 basis points. It's closed at 20.42%. We expect that we would see similar sentiments in the market for this week, with liquidity still at a very strong level. Uh, Notably, if you look at the primary market auction, that's the Treasury bills primary market auction for the past 3 to 4 auctions, we've observed the pattern. Rates are now relatively stable around the 19% levels. As we saw from the I think the third auction ago, the rate was around 19.9, came down to 19.63 at the previous auction. The previous auction came down to 19.6, and at the last auction, we saw it went back up by 3 basis points to 19.63. So I think this actually speaks to the fact that it's as if the market is now stable at this level, and investors who have been possibly waiting to see if markets would go up or go down before they decide and start taking positions accordingly, whether you're looking to sell or you're looking to buy. By the last auction, we saw that rates remain relatively flat, as on the 91 day, where we have 50 billion worth of NTB offered. We saw the stop rate closing flat at 18%. On the 182 day, where 100 million worth of Nigerian Treasury bill was offered, we also saw rate closing flat at 18.5. And on the 364, where 400 billion was offered, we saw a marginal increase of 3 basis points in rates to move from 19.6 to 19.3. That further emphasized what I said earlier. My rate seems to be stabling out at this point, and it's a call for all of our clients who are possibly waiting to see, because I can notably remember at the last auction, people were like, I think rate might go up, let me hold on. I think this is a confirmation that we've gotten to that level where we can start going in all out, as we might start to see a decline from these levels. And also at the bond secondary market, we saw improved activities when compared with the previous week. We saw some high interest, although sell-offs also dominated the market, as we likely saw some profit takers come into the market. But market generally closed on a bearish note, as we saw rates advancing by 4 basis points to close at 19.07%. And if you come to our currency market, the Nigeria's foreign exchange market is still in very, I would say, volatile states. We've not seen that stability we would want. Let me retract on that. I think the foreign exchange market seems to be quite stable now, but I think the volatility is still quite strong. As the previous week, we saw rates as the week before the second, we saw rates as high as 1,620 something. It came down to 1,605. Now we're down to we're up by to 1,607. We're still seeing that volatility, albeit I think it appears that we are now quite stable around 1,600 levels. And as everyone would agree, I think what matters most to most investors is actually the stability in the rates, as they would like to plan ahead rather than volatility. We just hope that even if rates would not appreciate below 1.6, if we can see that stability around these 1,600 levels, I think it will help our policymakers, our investors to plan appropriately and accordingly. But then we'll keep our eyes open as regards the space, and we'll continue to update our esteemed investors of what our projections would be and what we think would be the game plan going forward. Then what do we expect to transpire this week? We expect the funding rates to still remain around the levels where they are, because we do not see any significant activity or any significant outflow that would suppress liquidity levels, thereby increasing rates. And for the Treasury bills market, the secondary bonds market, we expect that liquidity would be the determinant for the direction of trades this week. And in all of this, we feel like our clients need to start taking positions, just as we're looking at the equity space. The returns that are currently available in the fixed income market are also very, very attractive. Because if you look at, for instance, let's look at our products very quickly. For instance, our lead fixed income fund, the annualized yield on this product is currently around 18.7. And with the levels where rates are in the market, it gives us some level of confidence that they would see some significant improvement from this 18.73, where our lead fixed income fund is. And if you take a comparison between, let's say, for instance, the FGN savings bond, where average rate is around 16, 17 to 17%. If you put your money in in the lead fixed income fund and putting your money in the FGN savings bond, I bet that we all know where we would be better off at 18.73% analyzed and around 16%. I think any rational investor will be looking to maximize their return by looking at an investment that will give them a potentially significant, potentially higher returns. And that's where some of our products come in. Looking at our balance fund as well. The balance fund currently outperforms the ASI. The ASI, as at Friday, stood at 5.64%. The year-to-date return on our balance fund is at 8.25, which means that if you had invested in this fund as at the beginning of the year, right now you would have earned at least 8.25% in terms of returns. But if you compare that with what the ASI is doing, 5.64, why the question might then be, why do we have why is the return on the fund higher than the ASI? It's not simple. It's simply because the fund invests in both the equities market and the fixed income market, which means that you get to tap from the returns in both ends. ASI currently 5.64. We already saw what the various fixed income markets have been doing so far in the year. So it gives this fund a better edge, and we feel like investors who are looking to diversify their portfolio and look at these funds, as we strongly believe that it's a means to achieve significantly higher return than what is available in the market. Also, our dollar fund. Over the weekend, we saw some developments, particularly from the US and the China meeting that held in Geneva. It seems like there's been some headway in terms of the headlock. The old tariff war between both countries. So we expect that the dollar instruments would improve this month. As once the news filter into the market this week, we expect that would support some bullish run, which also speaks to the fact that for as many people who have investments in dollar-based assets, it helps you to also diversify your investments from just earning in naira. You can also earn in dollars. And with these recent developments in the market, it speaks to the fact that the dollar-based assets will also perform exceptionally well going forward. And our Eurobond trading, for those clients who have a significant sum of FX, and are looking to invest rather than holding it in cash or possibly having it in your DOM account. The Eurobond trading is also something you can look into. With a minimum of $200,000, we can invest those funds for you in Eurobonds across sub-Saharan African countries. Also, we can also look at some other countries that even outside the SSAs that you might be particularly interested in. And the good thing is, at the level where those bonds are trading currently, they're trading at a relatively cheap prices, which gives you a better value for your money. Then lastly, our Gazelle portfolio. This is strictly a fixed income product. I know we've had questions from clients in the past to ask, what does this Gazelle portfolio really speaks to? So it's a fixed income product for those who might not be aware. You get to fix your money for different tenors from 90 as low as 90 days to as high as 365 days. It's not as if once the 365-day tenor matures, you would automatically have to take your money. You can roll over the maturity proceeds if you so wish. But the catch of all these products is, if you look at what you will naturally get from your conventional banks. Let's say, for instance, okay, I don't want to mention any bank, where the deposit money banks are offering you an average of 9-10% on your fixed deposit. We can comfortably say that we can offer you nothing less than 200 basis points above that, which means that you're better off putting your money in a Gazelle portfolio while maximizing on your returns. So these are the various product offerings that we have. If there's any of them which interest you, you can always get across to us and try our customer service, send us an email, and they would provide clarity on how to proceed. So with this, we come to the end of the presentation, and it's time for questions and answers. If you have questions, you can either signify by a raise of hand or use the chat box, and I will be here to provide answers and clarities as the case may be. Thank you for listening. Time for questions. You may adopt any of the two options available. Is either you signify by a raise of hand or you type in your question in the chat box. Floor is open for questions. Okay, good morning. Please, can you show the market's recommendation for the week? Okay, so yes, I think we've sent out the recommendations for this week. And I think the mail went out around 7 a.m. You may please check your email boxes, or possibly after this meeting, we'll still send these presentations across, and you can get to familiarize yourself with some of the stock picks for the week. Do we leave the market in May to return in Q3 based on the traditional maxim? Okay, I think I'll leave that to
Okay, good morning. So we will not advise you that you should leave the market. What drives the equities market is performance of the tickers. So as long as we've seen some improvement in various macroeconomic variables, we've seen some moderation of foreign exchange market, and most of the tickers that are under consumer sector, they are now recovering, they are posting good results. So we will not advise any claim to leave any tickers and be waiting for the Q3. Follow our recommendation. We have the buy, we have the hold, and we have the sell. Thank you.
Yeah, thanks. Is CWG a good buy? Is good to buy at the current price?
Good morning. If you check our recommendation, I think we have also factored in CWG as one of the companies it's under orders. So apart from the UPDC, so what we have done so far is to look at their performance. So in this current week, CWG is a good buy. Thank you.
What is the update on the allotment of First Bank bonus shares?
The allotment, is it bonus or the rights? The First Bank has not declared any bonus in the recent time. So maybe probably the client is talking about the right allotments. And for those who subscribed for the right, that's the one that took place in 2024, they have done that allotment. But if you haven't seen yours, if it has not reflected in your portfolio account, you can send us an email. Our registrar unit, they will take it up and then we'll resolve that issue. Thank you. But they have done that allotment for those who subscribe to the right.
Okay, before we take the other questions in the chat box, Mr. Gideon, you can see your hand is up. You've been given the permission to unmute. Kindly unmute and proceed to ask the question.
Hello, sir.
Good morning,
Please,
sir.
morning, sir. I want to know about the Owando. When are they? Because they say June and I think time. I want to know how's this issue of Owando stock. Is it to buy now or to sell again at that price?
For Owando, good morning, sir. In our recommendation, we are still conducting further review on Owando. So we have not placed, at a point in time, we place it on buy. So when we saw their results, but with the current results we have seen, we advise clients to just take action. Don't buy it. If you have it in your portfolio, you can hold it. But we are also conducting further review. If you check our recommendation, you see UR, which indicates under review.
Okay, all right. Thank you, Mr. Gideon. Good morning. Thanks for the lecture. We'd like to know if, okay, I'd like you to put more lights on Eurobond and the minimum amounts in that suite. Okay, Mr. Lawa, would get in touch with you after this meeting just to give more clarity on how Eurobond work. But just for knowledge sake and for the sake of everyone else on the call, it's not a fixed income instrument that is issued by either sovereign nations or by corporates, and usually in dollars, in US dollars, and sometimes we've seen some bonds in euro as well. The minimum, okay, the bond pays coupon twice a year, that's every 6 months, and the coupons are paid in dollars. And the value of the coupon you receive is a factor of how much you've invested. But to start with, the minimum investment sum to start with is to purchase at least $200,000 of whatever bond you're looking at. But like I said, I'll reach out to you after this call and we'll take the conversation further. Thank you. Mr. Joseph, your hand is up. You've been given the permission to unmute. Kindly unmute and ask your question. Mr. Joseph. Okay, because of our time, we'd like to move to the next person. Mr. Fatai, kindly unmute your mic and proceed to ask a question.
Hello, good morning.
Good morning, sir.
Okay, that's good. I still on Ohando. I think there was a plan to distribute extra shares or bonus to members, maybe in March and June. And I don't know why our accounts are not being credited with the first distribution. What's holding it?
Okay, sir. We'll reach out to the first registrars on the credit. They promised they will do that, but investors' accounts have not been credited. But we'll reach out to the first registrar for further information. I think by the time we're having another program next week, we're going to give clarity on that. Thank you.
All right. Thank you. Access Bank shares is stagnant. Share price is stagnant. Any reason for that?
And there's no any reason other than the fact that the stock has been marked for dividends. So they removed 2 naira 5 kobo from around 24 naira. So you see movement around we've been seeing movement around the price, but just that we haven't seen much buy interest. But as long as we see improved buy interest around the tickers, there is like tendency that the price is going to go up. But if you look at our recommendation under the banking stock, Access Bank is one part of our top recommendation because their Q1 result is out. So it's worth buying and it's a good company to invest in.
Okay, thank you. Good morning. Does gold still remain a long-term investment at present high price? Same question for silver and platinum.
Okay, well, the general belief is that it's good to protect your investment. But as you know, Elite Capital, we don't have any product covering gold. So with that respect, we won't be able to give any recommendation or clarity on that question. But it is believed generally from investment space that gold can be used to hedge against your inflation. But since we don't cover it, so thank you.
All right, thank you. Any news on Stanbic IBTC rights issue?
No news yet. So as long as they have to follow the sequence of approval from SEC, and then after that approval, it will be published in 3 national dailies and before the credit investors account. But we are following up with the first registrar for further development. But as at now, it's still in the pipeline.
Okay, we have a question here that I feel we need to clarify. Someone said, so the minimum amount one can invest in the dollar fund is $200,000. Okay, so no. In our lead dollar fixed income fund, the minimum amount you can invest is $1,000. That's $1,000. And the $200,000 is for Eurobond. If you're looking to invest in Eurobonds, that is when you need the minimum size you can buy is 200,000 nominal value. But for our dollar fund, which is a mutual fund, with as low as $1,000, you can invest in the fund. I hope that clarifies the question. Okay, because of our time, we'll take one more question. What is the update on Fidelity Bank offer? Did they not pay dividends regarding the shares? Will they still pay the same, assuming the shares were bought in the 2024 financial year?
Well, there have been several complaints regarding the crediting of a right on the public offer. We are still engaging the first registrar. We had 3 different meetings regarding the allotment. But we have seen that some investors' accounts have been credited, and then we have also updated that. But for those that are still outstanding, we are still engaging them. And as to whether those people will be credited for the 2024 financials, we also need to get clarity from the first registrars. Because people whose accounts have not been credited, we cannot actually determine until we get that information from the first registrar. But thank you for bringing this thing up. By the time we are meeting next week on the new program, we're going to give clarity on that. By that time, we'll have getting feedback from the first registrars. Thank you.
Okay, and a final question: can I reinvest my dividends? I think someone is asking if they can reinvest their dividends.
I think that's a perfect investment strategy, because you grow your holdings and then you also bring your dividends in. So we advise you, as long as we've been sending out some banner encouraging people to reinvest their dividends. That is a good strategy to grow your investment and to grow your portfolio. So please do that, sir. Once you received it, immediately transfer it to our trading account, and then we'll trade it for you immediately. Thank you.
So with this, we've come to the end of the session. Thank you for joining us. Just in case you missed out on any of the recommendation among others, you can get a recap on the YouTube channel, Lead Capital _PLC. Do well to subscribe. And if you have other inquiry, you can communicate to us via our customer service email. That's customerservice@leadcapitalng.com. Thank you. Do have a productive week.